All right, so in this video, we're going to talk a little bit about some features and characteristics associated with group health insurance policies. So for group health insurance policies, in order for a person to be eligible under a group health insurance policy, the person has to be a member of a group with a group policy. And perhaps the most common example of this would be uh, being an employee of a company that has a group health insurance policy. So most of the time, if you are working for a company and they have health insurance available to employees, that's typically under this group health insurance kind of policy. You could conceivably have other kinds of groups though. So you could have groups pertaining to hobbies or something else, possibly, I suppose. Now, normally, within the group, under current law and so forth, what occurs is that the average age of the group is used to set the premiums. So the younger the average age of the group, the lower the premiums are typically going to be. The exception to that would be smoking. So if you smoke, then it's going to affect your premiums. It's not just going to be the average age of the group. So normally, assuming people weren't smoking, then basically everybody's going to face the same premiums. If you're a smoker, then you would face some different premiums. Also, under a group health insurance policy for an employer, it's possible for them to distinguish between full-time and part-time employees. So it's possible that a group health plan might only be available to the full-time employees and not to part-time employees. Now, within that, generally the employee will have, if let's say it's a full-time employee, so we've got access to this group health plan, typically they will have options generally in which the employee can choose to just cover the employee, him or herself, or the employee and the employee's spouse, if there is one, or perhaps cover the employee, spouse, and kids, things like that. So you can kind of decide sort of who's going to be covered by the policy, and obviously that will affect the premiums that you're going to pay. And this type of policy will have an open enrollment period, just like the marketplace plans and that we talked about under the Affordable Care Act and so forth. So basically, what that means is you can enroll during this window of time. And typically, you're working for a company. The company will establish, kind of what that open enrollment period is, and it's typically somewhere between the end of November and the beginning of December. Somewhere in that window generally. There's kind of an open enrollment period. Sometimes the open enrollment period is a little bit wider for some companies than it is for others, depending on what they've set. But basically, that's when you get to make your choices and make your selections for the following year. One of the things that's kind of significant if you have a group health insurance policy is that potentially you could have a situation where there's coordination of benefits. And basically what that means is if you as an individual are covered by multiple policies. So let's suppose you happen to be covered by your spouse's group insurance policy and your own employer's group insurance policy. Then basically what's going to occur is there's going to be a coordination of benefits between the two insurance companies. And they're going to figure out basically who's paying what. Now, what gets interesting with that is basically, I'm not quite sure why you would, in most cases, actually be on both plans. Maybe there's some case where one's really covering something that makes sense for you to sign up for that, but the other one is covering something else you really want, you sign up for that too. But probably in most cases would be rather expensive. It's also possible that if you thought that your coverage was kind of inadequate, that you could buy your own plan. We'll talk about that under individual health insurance as well. So it's possible you could have multiple policies in play, but probably most of the time you don't have too many. But as a sort of a personal anecdote here, there were some periods of time there at one point for my family where some things were going on that led to some pretty substantial and very expensive medical bills for the family. And as a result of that, we only had one health insurance company that was involved, but they were real interested in finding out if we had any other policies. And so we actually received multiple letters, I think, from them saying, you need to inform us if you have any other policies. You please respond back with any other policies that are in play. And I think we had to kind of work with them to communicate multiple times that no, in fact, there are no other policies. But I'm pretty sure they really were hoping that there were, but there weren't. So anyway, now within the context of an employer-provided health insurance specifically, you can actually have a couple different ways that can be run, and some features associated with that. So if for an employer-provided health insurance, that would be one type of group health insurance. The policies can be either self-funded or considered fully insured health plans. So a self-funded plan is basically one in which the employer basically sets aside a pool of money to pay the health costs for the year. So in effect, they're sort of acting as their own insurance company in the sense that they're setting aside a pool of money to cover the expenses. And if you're the employer, the reason you might do that is because you're thinking that you could actually save a little bit of money versus buying a fully insured health plan in which the insurance company is going to pay for everything. Now, the possible risk that you have as an employer is that if your employees incur significantly more medical expenses than you expected, then that would directly affect your proverbial bottom line. So it could be an issue. And if something really expensive occurred, that could be rather bad. So sometimes companies that are doing self-funded plans, even though they are pretty much self-funded, they've set aside a pool of money and they're going to just pay themselves to cover those expenses. Sometimes they will purchase a stop loss policy that basically says, all right, let's say we set aside, let's say it's a medium-sized business, and we set aside, X many millions of dollars to pay all medical expenses. And then I buy a stop loss policy that if expenses get a certain beyond a certain point, then basically this other insurance company will pay the costs beyond that, and basically just limits how bad it could really get. And obviously that comes at a cost to the employer, but it provides a little bit of protection if things really get out of hand for their costs. The contrast, that would be more the fully insured health plan, which is basically one in which the employer is contracting with kind of your stereotypical insurance company to provide the plan. And so in that case, the insurance company is just, they're dealing with the claims and benefits and costs and all of that. Now, one of the things that is worth noting as it relates to employer-provided health insurance, and that's FMLA, which stands for Family Medical Leave Act. And basically with that requirement is that under the law for certain types of events, basically employers have to allow employees to take a certain amount of leave, and it's not going to be typically paid leave, but they have to allow the employees to take a certain amount of leave for certain covered family sort of emergency kind of situations. Also, it's worth noting that if you think about what's going on with an employer-provided plan, typically the employer-provided health insurance is going to be a situation in which the employer is going to pay some of the health premiums as sort of a part of your compensation package. And technically that's a benefit to the employee, but interestingly, generally those premiums paid by the employer are not considered taxable income to the employee. So that's in effect a tax-free benefit the employee is getting. So when you are working with a company and they're paying those premiums, normally you don't have to pay taxes, even though that's a benefit to you. Also, the premiums that you pay as the employee are generally pre-tax. So in other words, you get to pay that. It gets deducted from your paycheck before your taxable income is computed. And so therefore, generally speaking, you get to pay with pre-tax dollars, which saves you a bit of money. Now, if you are dealing with a self-employed situation, and you're sort of providing health insurance through your company, but it's a self-employed scenario where it's your own company and so forth, some different rules can apply there in terms of what's taxable and what's not taxable and how that's computed and so forth. But I'll leave those details for you to kind of research a little bit more if you're facing that specific situation, because that's something that's a little bit more unique to people in that particular scenario. Most people aren't going to be addressing that or dealing with that too much. All right, hopefully this has been helpful. Thank you for watching and have a great day.